What does Los Angeles, Las Vegas, and Logan, Utah all have in common? Well, if you're a real estate investor, you might know exactly what I'm about to say. Welcome to On the Market, and today we're going to be talking about the top 10 markets that are geographically constrained with where they can build new supply. Now, Los Angeles is geographically located between the ocean and the mountains, and it's basically all built out, and zoning laws have made it harder for developers to build more units. Now, one estimate says that about 70% of all tracts in the city are zoned for single family. Now, Las Vegas is constrained by the mountains, as well as basically an artificial border against federal land. And Logan, Utah is wedged between two mountain ranges in a place called the Cache Valley. Demand is still high in Los Angeles, and demand has been increasing in Vegas and Logan, Utah over the years. And with supply constrained by geography and also artificial barriers, as long as people want to live in these places and supply has a harder time being built, prices will continue to go up. Now contrast this with markets like Dallas or Phoenix or Indianapolis, where you can keep building out as far as the eye can see. Prices there don't typically rise as fast as they would in other places that are geographically constrained. This has been good for renters and buyers because the lack of supply constraints helps keep prices low. But if you're an investor that would like to experience high appreciation, like many coastal California markets, you might want to consider investing in places with some kind of supply constraint. So I've developed a list of the top 10 markets that are still geographically constrained, but also still experiencing growth. My own self-contained rule is I'm not going to be including any coastal cities on this list because they're already basically guaranteed to be supply constrained. I wanted to know which places not on the coast were supply constrained, what their median prices were, and what their historical 3-year price growth has been. So let's get into it. Our first market on the list is the Wasatch Front. Now, I'm cheating here because the Wasatch Front includes 3 different metros: Salt Lake City, Utah, Provo, Utah, and Ogden, Utah, but they're all part of this geographic area called the Wasatch Front. Now, all of these cities are between the Wasatch Range, these mountains right here, and essentially other geographic barriers such as these 2 lakes, as well as some other mountains. So essentially the entire city or string of cities is basically built along this line in between the geographic constraints on the west, so the lakes, and the mountains on the right. So they're heavily constrained, and population has been growing here as well, and so prices have risen at a pretty decent rate over the past few years. We'll start with Salt Lake City. The median price is about $540,000. And its 3-year growth in price has been about 8%. Now, one thing I also want to point out is the average population per unit is at 2.72. I'm just putting this out there just so we can have it as a comparison for how densely packed an area is. Next, we have Provo, Utah. The median price is about $500 and almost $30,000, and it's had a 5% 3-year growth in price. And the average population per unit is 3.36. This is one of the highest average population per units in America right now. So it's pretty dense as far as how many people live in a household on average. Then next we have Ogden, Utah, and the median price is about $490,000, and it's experienced about an 8% price growth, and the average population per unit is about 2.92. So still pretty high, not as high as Provo, but Provo is one of the highest on the list. Next is Logan, Utah, which is near the Wasatch Front in a place called the Cache Valley. Now, this valley is surrounded by these mountain ranges, and Logan has been seeing some population growth as well, nowhere near as much as the Salt Lake City, the Wasatch Range. But Logan, Utah is packed between these mountains, and the median price is about $440,000. It's experienced a 7% 3-year price growth, and the average population per unit is 3. So higher than Ogden, not as high as Provo, but still pretty high if we're talking about in terms of across America. Logan, Utah's pretty tightly packed right now. So this might be an interesting place to buy as it's packed between these 2 mountains. Fun fact, it's one of the only MSAs in America that doesn't have an interstate running through it. So it is kind of hard to get in and out of this place. That's probably why it hasn't grown as much over the past 5 decades, nowhere near as much as Salt Lake City and the Wasatch Range. Number 3, Boise, Idaho. Now, Boise, Idaho is essentially surrounded by mountains almost everywhere. There is also some federal land that we cannot build on. But if we're able to zoom out on Google Earth, you'll see that Boise is sort of, again, surrounded by this natural barrier, and places that haven't been built out yet are still farmland. But I mean, if they're able to keep building into this farmland, eventually they will have to stop building. They cannot build any further out than what you see on this map. So that's pretty interesting to keep in mind. Its median price is about $470,000 as of right now, according to Zillow. Over the past 3 years, it's actually experienced a negative 2% price growth. It's declined in price by 2% from its 2021 high. So I don't think this trend is likely to continue. There are supply constraints. Job growth is still very strong in this area, and now is what I would probably consider the dip in the market. And the average population per unit is 2.56. So we're getting in sort of the average range here. Next, number 4, the Front Range. I'm cheating again because the Front Range includes 3 other markets that I'll be talking about, but I'm including it as number 4 because it's one geographic area in my mind. The Front Range is sort of the front-facing parts of this Front Range in the Colorado mountains, and it includes Fort Collins, Denver, and Colorado Springs as their largest MSAs. You could also include Boulder in that as well, but I'm going to loop Boulder in with Denver. So along this, people want to live near the mountains if they're choosing to live in this area. The closer you are to the mountains, the more amenities you have, and the farther away the mountains, the less amenities you have. So as homes typically get closer to the mountains, they're going to see more price appreciation because you can't keep building into the mountains. It's essentially all built out, and they're going to probably continue building houses into the east, sort of into the plains. And from what I've talked to, no one really wants to live there, but they do because it's affordable. So just keep that in mind. Now, first we'll talk about Fort Collins. The median price is about $550,000. Its 3-year price growth has been about 9%, which is pretty high, and the average population per unit is about 2.25, so less than what we've seen with the other markets we've already talked about. Denver, the median price is $580,000, just about, according to Zillow. It's experienced 7% 3-year price growth, which is pretty good. And the average population per unit is 2.35. And then we'll move down to Colorado Springs, where the median price is lower at $450,000 with a 5% 3-year price growth and an average population per unit of 2.45. Number 5 is Reno, Nevada. Now, Reno has some constraints against these mountains, as well as some federal land that cannot be built on. And this is basically going to be the same case with number 6, Las Vegas, Nevada. Las Vegas is also surrounded by mountains and federal land that cannot be built on right now. You essentially have to make a deal in order to develop on this land. So it's currently constrained by not only geographic constraints, but also artificial constraints as well, pushing prices up. Number 7 is Flagstaff, Arizona. Flagstaff is near and dear to my heart. My grandparents had a cabin there, and we would visit there when we lived in Phoenix, and it was an escape from the heat. And I always loved Flagstaff. I always thought it was an amazing town. I personally think it's the greatest high elevation town in America, and apparently a lot of other people think that as well. In fact, when I did a study of all of the markets that appreciated the most over the past 5 years, Flagstaff, Arizona actually was number 12 in terms of dollar value appreciation. There were a lot of California markets that were between ranks 1 through 10, but Flagstaff, Arizona was number 12, which I found super interesting, but also not surprising. They have geographic constraints. It's in the forest and the mountains, and there is an artificial zoning barrier, if you want to call it that. The city doesn't allow you to build past a certain number of stories in certain areas because they don't want to block the view of 2 main mountains in Flagstaff. So not only do you have this geographic constraint, you have this artificial constraint, and it's a cool college mountain town 2 hours north of Phoenix, which has seen a huge increase in population. And as if people want to escape the heat, they go to Flagstaff. Or they go to other markets like Sedona or Prescott or Payson, but Flagstaff appears to be the most popular. And again, knowing that it's the 12th highest appreciating market in terms of absolute dollar value, that didn't really come as a surprise to me. It's a wonderful place, and it might be a wonderful place to buy a property as well. Number 8, we have St. George, Utah, which is surrounded by beautiful mountains. If you've ever been there, it is absolutely gorgeous. These red rocks and these green trees, it's so wonderful. And a lot of other people think that as well. And so it's very similar to Flagstaff, I guess. There is a college there. It's mostly a place for retirees, but again, beautiful place. Can't really build that much there, geographically constrained, and it's about 2 hours away from Vegas. So maybe if you live in Vegas, you might want a vacation to Zion National Park, which is right there by St. George. So it's a wonderful place, and it's geographically constrained. So prices pretty much can only go up. Number 9 is Santa Fe, which is tucked between these mountain ranges. And additionally, they also have zoning constraints. Now, every single house in Santa Fe or building in Santa Fe is built to a very particular style. And that has left some constraints with how much they can actually build there. So not only do they have geographic constraints, but they also have artificial constraints, limiting supply. And it's also the state capital. And it's a really quirky, cool place if you've ever been. So prices continue to go up. And at number 10, we have Lexington, Kentucky, which technically has no geographic constraints, but all artificial constraints. There are limits to how much you can actually build outside of the city to protect the land that is there. So that artificial barrier has driven prices up in this area. And for some honorable mentions, we have number 11, Northwest Arkansas, or Fayetteville, Arkansas. Now, this area is very special to me. It's where I bought my first house. We have hills sort of in the bottom area of the region, and in the top and northeast part of the region, we have lakes, but it's also very flat. And the very pro building there. Buildings go up pretty fast. So even though you have some geographic constraints, there really is no zoning constraints here as much as there are in other markets. They want more houses there, and they're very friendly to builders relative to other markets like Los Angeles. So that has been very interesting to see. Honorary mention number 12 is Chattanooga, Tennessee. We have hills on both sides of the city, as well as some rivers that run through it, which naturally limit the supply that can be added there. And number 13, we have Knoxville as well. Very similar. We have hills and a little bit of river, but it's mostly the hills in this area that might limit construction. Nowhere near to the degree as St. George or Vegas or Flagstaff, but there are some geographic constraints to this area. Number 14, Asheville, North Carolina. I'm calling this the Flagstaff of the East. I've never been, but from what I've heard, it's very similar to Flagstaff. It's in the mountains. It's very quirky. It's a college town, and it's near a major metro area, Charlotte, North Carolina. So people that live in Charlotte might want to visit Asheville. So I call it Flagstaff East, and a lot of people like to think that it's very special to them as well. And we've seen that in the price growth that it's experienced over the past 3 years. And finally, number 15, Bloomington, Indiana, which actually has some hills to the east of the town that are limiting supply additions there. So places sort of in the middle of the town and closer to the eastward part of the town where there are supply constraints might see some more price appreciation as time goes on, because they can't really build anymore in that specific area. But again, it is Indiana. They are more builder friendly than other states. So only time will tell if this place continues to appreciate at the same rate it has been. Do you agree or disagree? Let me know in the comments. I haven't had the privilege of visiting all of these cities yet. So if you live in a particular city that I mentioned, please let us know what you've seen with your boots on the ground experience. Are there actual supply constraints in that particular market? Let us know. And thanks for watching.